Hello and welcome. My name is Loraine Martinez Bellamy. I'm an attorney at the Connecticut Fair Housing Center, and today I'm going to be talking to you about your COVID-19 post-forbearance options if you have a Fannie Mae or Freddie Mac loan. And before we get started, in order to determine if you have a Fannie Mae or Freddie Mac loan, you can look yourself up here at the websites I've provided, and it will just ask you for your name, your address, the last four digits of your social security number, and with that information, the server will be able to look up and confirm or not whether you have a Fannie Mae or Freddie Mac loan. Fannie and Freddie loans are also referred to as GSE loans, which stands for government sponsored enterprises. So you may see that language in reference to these type of loans. The COVID-19 forbearance for Fannie and Freddie loans was a temporary pause or reduction of your monthly mortgage payments available to borrowers with pandemic-related hardships, financial hardships. So Fannie and Freddie currently have no deadline on requesting a forbearance. So if you have a COVID-19 pandemic-related hardship, you can request a forbearance at any time. The term is 6 months with 6 months additional available upon your request. And you can also request a shorter forbearance on Fannie and Freddie Mac loans. Your first option post-forbearance is a deferral. And a deferral means that up to 18 outstanding payments are placed at the back of your loan and will show up in your statement as a deferred principal balance. So nothing happens. The servicer just takes up to 18 payments that you're behind on and moves them to the back of your loan so you don't have to worry about them. You can be current again and move forward with the terms of your original loan. And this is the perfect option for a borrower who was less than 2 months delinquent, that's required on March 1st of 2020, can afford your old pre-hardship mortgage payment, and is no more than 18 months behind on mortgage payments. The deferred balance will include the principal, interest, and escrow advances, so your entire payment. Accrued and unpaid late fees will be waived before anything is put to the back of your loan. And the balance does not require payment until the last mortgage payment is made. You refinance your loan or your property is sold, whichever occurs first. So you don't have to worry about it unless you have intention to do one of those things. Post-forbearance option number 2 is the flex modification, and this is best for borrowers who cannot afford their pre-hardship payments or are looking for a payment reduction, or do not qualify for the payment deferral because they either owe more than 18 months of payments or were more than 2 months delinquent on March 1st of 2020. So those are the two factors to take into consideration. So this will be your option if you cannot meet those. And this option does require a borrower to complete a 3-month trial loan modification in order for it to be permanently processed and for your loan to be brought current. The flex modification, a servicer targets a 20% reduction in principal and interest, and it goes through the following steps to try to achieve that 20% reduction in your principal and interest. So it's not your full payment, it's just the P&I portion of your payment. Servicer will capitalize your outstanding payments, which means they will add the outstanding payments back to your unpaid principal balance. So that would be how much you owed before you fell behind, plus your arrearage, what you're behind on. Step 2 is to set the interest rate at the lesser of your current interest rate or the market rate. This is very useful and super important because, as you know, interest rates for mortgages have risen ridiculously during the pandemic. So you may have been able to get a 3.5% interest rate a few years ago that is now no longer available, and the market rate would be 5.5 or more. So if you can keep your current interest rate, that will be super helpful to make the payment affordable. The servicer will then extend the term of your loan by up to 40 years if necessary to hit that target reduction of 20%. If in taking those 3 steps, your payment is still not reduced by 20%, the servicer can decide to forbear your principal down to 100% loan to value, which I will explain it in much more detail. And this is only available if your home is underwater and it is necessary to meet the target payment. So step 4 and 5, I'm going to describe in more detail on the next slide. So more about principal forbearance. If the borrower is underwater, and by that I mean your house is worth less than what you owe your mortgage company, then a flex modification allows the servicer to forbear the principal down. Here I'm going to give you an example because it's easier to explain principal forbearance with an actual numerical example. So if you owe $200,000 in your unpaid principal balance and your property's fair market value is $150,000, your servicer can forbear up to $50,000 of that principal in order to reach the 20% target payment reduction. So we're getting super technical here, and if you're confused, I'm sure you are not alone. What we mean by forbear is it can take that $50,000 or up to that $50,000 chunk and just move it over into a non-interest bearing balloon of sorts. I know balloons can be scary, but in this case, it is 0% interest. It is just making your current payment affordable for you in hopes that you will get back on your feet. And by the time you have to deal with the foreborn principal, you will have the ability to do so. And that 100% loan to value forbearance means that you are now paying interest on only $150,000. So it's as if you only owed $150,000 for the purposes of your payment. And it can go even further. The servicer can go even further and forbear down to 80% loan to value. And when I say loan to value, what I mean is how much you owe the loan to the value of your home, the fair market value. So in this case, if a borrower owes $200K and the property's fair market value is $150,000, the servicer can forbear up to $60,000 or 80% of the principal in order to reach that 20% target payment reduction. So now the borrower is only paying interest on $140K versus $200K, which makes his or her payment more affordable. So if you have any questions about whether you should qualify for principal forbearance, whether your servicer considered forbearing part of your principal before denying your loan modification, please reach out to us. I'm going to be sharing our contact information shortly. Post-forbearance option number 3 is the MyHomeCT Pandemic Relief Program. And I didn't go in order, in my preferred order. But if you are behind on your mortgage and you owe less than $50,000 or $50,000, I would suggest that you apply for the MyHomeCT Pandemic Relief Program first. The reason I say that is because this is grant assistance. Either of the options we discussed before is adding the additional debt to your balance. This would allow you to get free money essentially to bring your loan current. And the program is available for delinquent mortgage payments, property taxes or homeowners insurance, water and sewer bills, condo common charges and special assessments, and any fees and costs advanced by servicer on a reverse mortgage. In order to qualify, you would have had to experience a financial hardship between October 2019 and present day. And the reason that the program administrators expanded that is because it is possible that someone that fell behind in the fall of 2019, had it not been for the pandemic, would have caught up on their mortgage or other housing related expenses. So the administrators expanded that to make up for the fact that people did not expect to lose their jobs or for their hours to be reduced wildly during the pandemic. So we want to make sure we capture those folks as well. And the property must be a primary residence, your primary residence, and a 1 to 4 unit home. Your household income must also be less or equal to 150% of the area median income. I provided you a tool here that CHFA is providing to help you determine what your area median income is, so you can know if you qualify for the program. This link here is also a live link and will bring you to the MyHomeCT webpage where you can apply. It's an online portal. And I have found the portal very user-friendly, but if you need assistance, they have a list of housing resource centers that MyHomeCT is partnering with to help you upload documents, complete the application, print things, and just walk you through the process. So you'll be able to select your area of the state and find a resource center that can help you get that application in. And one thing to keep in mind is if your mortgage exceeds the program maximum of $50,000, I would still apply for MyHomeCT first and see if you're eligible for the maximum amount. And then you could combine the grant funds with one of the loss mitigation options that we discussed before in order to bring your mortgage current completely. Just make sure that you apply for MyHomeCT first, because you may not be able to access the grant funds if when you apply, the program administrator sees that you are now current on your mortgage. Even if your financial hardship continues, you may not be prioritized in the way that you would like to be if you are then current. Fannie and Freddie require servicers to completely suspend foreclosure activities for up to 60 days if it has been notified that the borrower has applied for MyHomeCT. So just make sure that if you do apply, that you notify your servicer. MyHomeCT may also notify your servicer, but you want to cover your bases, because if you can avoid a foreclosure, or you can avoid your foreclosure moving forward, that's what you would like to do while you're exploring your options. If you have any questions about your eligibility for any of these programs, about your options post-forbearance on a Freddie or Fannie Mac loan, or if you believe your servicer has mishandled your mortgage during the forbearance or after the forbearance, please feel free to reach out to us. We have an intake line available all of the time. We have English and Spanish help available on demand, and we can reach out to translators in other language if you request it. You can also schedule a virtual advice session using this live link below, where you can speak to an attorney. These usually occur Friday mornings via video chat, and you can discuss what's going on with your case. About us in general, we at the Connecticut Fair Housing Center, our work is to ensure that all people have equal access to housing opportunities in Connecticut that are free from discrimination. So we help people in foreclosure, but we also have an intake line for housing discrimination cases. So any discrimination that you feel you have experienced in the rental process or from your existing landlord, feel free to reach out to us and submit a complaint. And that is all. I hope this has been helpful. Thank you.